What a move, what a move, what a day. Welcome back, guys. It's Tuesday evening. It's time to get back to work. Another great day comes to an end. Hope you guys made some money out there on that beautiful drop off the highs. It's back to work, though, right? We're only as good as our next winning trade. Let's go find some more for tomorrow. It is the 26th day of April, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's Hump Day trading session. I got a great video for you guys tonight. Tons of trades setting up for tomorrow. You know me, right? Anytime we see big moves on the charts, the follow-up day is always one of my favorites. Got some big moves on the E-minis, obviously. And I'll tell you, oil looks like there might be a curveball on oil. I can't wait to get onto the oil chart tonight. Get a bunch of great trades, maybe some reversals on the oil for tomorrow. I'm not going to go into more of it right now, though, but we're going to cover all my favorite trades in tonight's video. That way you have a roadmap to make some more money tomorrow. I'll also, of course, in tonight's video, talk about some stuff to avoid because there are definitely going to be some curveballs. There are some traps on these charts tonight. I want to make sure you know how to stay out of trouble, that we can finish the day tomorrow firmly in the green, whether you're trading on your own or you're trading with us tomorrow in our trade room. We have a ton we're going to cover in tonight's video. Before we jump in and get this party going, I'm really excited to go over these setups for a wacky Wednesday tomorrow. But before we jump into it, though, make sure you subscribe to our YouTube channel. I publish this video with my best trade ideas every evening on this newsletter. Don't miss tomorrow night's video, so make sure you subscribe. And when you do, set your notifications, set the little bell icon. That way you always get notified every time I publish something new. That way you don't miss tomorrow night and the rest of these week's nightly newsletter. So make sure you subscribe. Also, questions. Any questions, drop those questions for me in the comments section. I do personally go back and answer all the questions myself, so don't be shy in the comments for the questions. And if you enjoy this video as much as I enjoy making it, if you're like me and you use this routine, get your charts right, get that mind right, hit that like button for me. Appreciate you guys carving some time out, sticking around, and supporting this YouTube channel. But let's get the intro out of the way, right? This money is not going to make itself tomorrow. Wednesday is right around the corner. Where's the easy money for tomorrow? Well, boy, oh boy, what a day, what a day. I'll tell you, big moves down, of course. Who could have ever seen that coming? If you watched last night, you know what I'm talking about. Big move down on the S&P, big move down on the Nasdaq. Anytime we see a really big move in one day, there are two very specific scenarios that we know to be looking for and waiting for tomorrow. I'm going to talk about those two specific types of setups in this video tonight. That will give you a good game plan to make some money on the E-minis for tomorrow. And of course, over on the oil is definitely bullish right now. But I'll tell you, it ain't looking easy to be a buyer on this. We'll talk about why I say that. Buyers, I'll tell you right now, we may look back at this move at 102.25 here, 102.5. We may look back on this move today, later on this week, and go, oh my goodness, what a pivotal point of this market. I'm going to talk about why I think this is a pivotal point and how you can capitalize on it and make some coin on this move, no matter whether we go up or down tomorrow. Get some really great trade ideas for oil tomorrow, and we're going to dig into that here, of course, later on in this video tonight. Speaking of tomorrow, though, especially for oil, tomorrow is a Wednesday. Now, remember, tomorrow is kind of the beginning of the end of the month. And so we do want to remember that as we transition into a new month, the new month, of course, is first of next week, we do expect to see an uptick in volatility. So do not be surprised if the ATR starts to widen out, right? We start getting some more volatility, widen the stops out, widen the targets out. We're going to probably see some more volatility picking up here Wednesday, Thursday, and Friday. Also, we have earnings this week. We know this. Most of the big earnings are going to be either before the open or after the close. We talked about this last night on the video. Be aware, tomorrow night and Thursday night, there are a lot of big tech company earnings, especially on Thursday. Tomorrow we hear from Facebook. We hear from PayPal tomorrow evening or tomorrow afternoon. Be aware of that if you are trading the Nasdaq. The S&P is kind of insulated from this. We don't see see a lot of jitters on the S&P 500. Obviously, oil, I'm not going to apply too much on this, but the Nasdaq definitely is a market that has potential to really get whippy into the close or right as we go into the Asian Open at 6 p.m. Eastern Time when you've got big earnings tomorrow night and Thursday night. Just be aware of that if you're trading into the close or into the early part of the Asian overnight session. There does tend to be a bit of a whipsaw there after some big earnings comes out. And people are really worried about earnings right now ever since that big Netflix, that Netflix collapse we saw a week ago. Everybody's kind of holding their breath waiting for these tech company earnings to come out right now as the demand slows down for the services post the pandemic lockdown. That is something we're watching here tomorrow late in the day for really, again, mostly focused for the Nasdaq. As we look at the actual news for tomorrow, there really isn't a lot on the schedule. We have that weekly inventory report at 10:30 Eastern Time. This, of course, will only apply to crude oil. This will not apply to the S&P or the Nasdaq. But if you enjoy trading oil like we do in our trade room, you got to be aware there's going to be a bit of a gap in the trading tomorrow. Wednesdays are usually one of the more difficult days to trade oil just because you really can't trade into that news. I'm not going to gamble into the news. I use a 10-minute buffer, 10 minutes before, 10 minutes after. We don't trade the news, we trade the reaction. So by about 10:40, 10:45, we'll get back after it. Oftentimes, though, on Wednesdays, oil is a little bit smaller window of opportunity because you have to trade around that news event. So please be aware of that tomorrow. If you're not with us tomorrow in our trade room. And then I would imagine a lot of tomorrow is going to be based on, how are they going to set things up ahead of earnings tomorrow afternoon? And I would imagine tomorrow is going to be a big, how does the market react to this big bloodbath we've seen? We saw 2 days, Thursday, Friday last week. Monday was kind of a bounce day. Big move down. Will we keep going tomorrow? Will we range out tomorrow? I think a lot tomorrow is going to be based on how the markets kind of take a deep breath and think about what they want to do going forward. Other than that, though, there's no major news on the schedule. We get some earnings late in the day tomorrow. Wide open day, besides oil. Again, wide open day as far as any news events go. Let's get back to the good stuff here. Back to our charts. S&P's ready. Nasdaq's ready. Oh, the oil is ready. Glad to see you are ready right along with us. Now, bottom line, whether you trade one of these markets, which is a great way to start your career, or you trade all of these markets like we do in our trade room, we also trade gold and our trade room as well. Whether you trade one or you trade all of them, I'm going to cover my favorite trade ideas, my favorite setups, things to avoid the entire video all the way through each of these markets. You'll learn something new, something you can make money with throughout the entire video. I'll provide different trade variations, different setup ideas, different ways of looking at the markets. I'll tell you, you're going to learn something new, something profitable throughout the entire video. And you know me, I try to save the best stuff towards the last, so I'll give you, or towards the end, so I'll definitely give you a reason. Stick around and watch the video all the way through. So 1, 2, 3, we'll go S&P, Nasdaq, crude oil. You better stick around and all the way to the end and get some good stuff to talk about there on the crude oil. What's going on right now on the S&P? How would you describe the S&P? A cinder block tied to a rope, tossed in the river? That's what it seems like. All kidding aside, though, what's the most important thing that we see here on this chart? It is the sheer size of this move. Anytime, we're obviously bearish. You don't need me to tell you we're bearish right now, right? It's a bear market, but the sheer size of this move, anytime we have a really large move in one direction, we expect one of two scenarios. Either a range, because of course nobody dares to buy this market, and because it's so bearish, nobody takes their profit. That causes the markets to go sideways. Or we may see all the buyers who really they contributed to this big move down, the buyers getting run over early today. We may see those buyers dry up, getting run over, and nobody might want to sell down here, and we make it a deep pullback to attract in more sellers. Oftentimes big moves in one day. We're going to come in tomorrow and nobody wants to sell down here. We're too low to sell at this point. That is oftentimes why big moves produce relatively deep pullbacks to really put some meat on the bone. Give those bears something to really chew on here for tomorrow. So two basic scenarios, either a trading range down here or we expect to see a deep pullback. And if we're lucky, we'll get both. That's how you know you're good, when you get a range and a deep pullback. Those are almost guaranteed winning opportunities here. So we kind of know the situation. What do bears want? The bears, they want to sell pullbacks right now. They want to sell pullbacks. What do the buyers want to do right now? The buyers have to stay patient. One thing about moves like this is you got to be very careful trying to pick a bottom. You'll notice we are sitting on some major support, but I don't care what support level I'm in right now. It doesn't matter to me what support area I'm at. I'm definitely not looking to pick a bottom in this much of a strength market. What I will consider doing, though, is grabbing one of those double bottom reversals. You know, we always talk about let the bears make their money and then we can make our money as buyers. A double bottom reversal. Again, I'm not gonna buy into this move, but if they can get a pullback off the low, bears come in, they get what they want, they take their profit, we can then get what we want as buyers going higher. And of course, you know, anything can happen these days. These markets are, they're obsessed with interest rates in the Fed right now. We have all the uncertainty happening in Eastern Europe, right? Ukraine, Russia. Who knows, right? This could reverse. It doesn't seem likely right now, but buyers would be open-minded to a reversal. Buyers are probably begging for a reversal right now. So how do we trade it? Again, range or a deep pullback. Range or a deep pullback. I want to get up in some of these levels of resistance. If I had my choice tomorrow, I would get right up into this area here. A couple of reasons why. One, it's that previous major low. You have to think that bears would love to sink their teeth into that area there. I also think this trading range, we see a lot of times where we get a range, the market will kind of spit out that range and then come all the way back, give it a little kiss, and then come right back down again. And by the way, this is something on my mind for oil. If you're an oil trader, keep this little illustration in the back of your mind for oil. We'll talk about this because it's exactly what's setting up right now on the oil as well. So if I had it my way, I would see a relatively deep pullback on this. We'll see, of course, what we get. What you want to think about, though, here's some food for thought when it comes to a pullback. It all depends on the strength of that pullback. So, for example, I get my traps up here, or my swings, my channel up here. I just want to get off these lows and really try to trap in some of these buyers. One way to do it would be get up off that low, get up into some areas of resistance, and then right here, see how the buyers come in right there, right? See how it's strong move down, they pull up, the buyers try to buy the pullback. See how that fails? That's exactly what we're looking for over here. These are an easy money trade. Pull back off the low, into an area of resistance. I can't stress that enough. We then wait for, as we pull back here, we're not trying to pick that top. We wait for those buyers to come in, let them try to get long, and then once they try to get long, we know exactly where their exits are. We know where their stops are. As we always say, we know where their pain is, and we can sell it right back down to retest the low. These oftentimes will be a failure into a pullback combination. Failure into a pullback combo. Again, strong move down. The odds are almost guaranteed we end up retesting that low at some point tomorrow morning. I'm waiting for that deep pullback. Well, I'm waiting for a pullback. I'm trapping in those buyers, trying to get long off the moving average, and then I'm grabbing that first pullback off the moving average as it rolls back over. This would be nice, don't get me wrong. We'll take that trade all day long. However, what we really hope for is that deeper pullback. Now, how is a deeper pullback different? Well, when it comes to deep pullbacks, I'm going to get rid of this channel here just for a second. I've got this trend line coming down. I like that trend line. I like this whole area up here. This whole area really looks great. That 4190 to 4200. Let's say we get lucky. Let's say the trading gods are shining down on us here tonight. They're watching my video going, all right, let's give JJ, let's give him what he wants. He's done a good job this week. Let's say we do get a deep pullback. There are really two things you want to think about with a deep pullback. One is going to be a two-legged pullback. Okay, what a two-legged pullback really ultimately is, and it could have three legs to it, what you want to think about is that trend line coming off. These are relatively common for a deep pullback. If I see a deep pullback where we go up, and this will oftentimes come off the moving average like that, right? It'll bounce up moving average, then go higher. You draw that trend line right up those lows, and then basically your job is to get underneath that trend line and use it for the short. Now, that's just kind of one variation of this. That's one way to look at a deep pullback. Keep your eyes out for those trend lines as we go. And a really easy rule of thumb is if it bounces off the moving average on the pullback, right? So as we're pulling back, we bounce and we go higher. That is almost always going to give you a trend line right there. And that trend line can be used for the short going back down. We call these two-legged pullbacks. These are somewhat common. What is a little more common though, which is what we kind of hope for tomorrow, is let's get that nice deep pullback. And we get those deep pullbacks, we always want to ask ourselves that important question. How is location? Great. How is momentum though? Yeah, momentum's not that great in this case. It's a relatively strong pullback. So in these situations, what you do is you use the two-try failure. You wait for the buyers to try once, you wait twice, all their stops now are sitting right below that low, and we can of course sell right into those stops. And then remember, whether it's a two-legged pullback or this deep two-try failure pullback, once this thing starts to collapse and run lower, this is where the fun starts. Now mark off that low, mark off that high, look left, and I always like to grab those traps. That trap high off the high of that channel, man, that's a great setup. Trap pattern, failure pattern, pullback pattern, and again, we're trying to go back down to retest the low. This is the scenario that if we get lucky tomorrow, this is what we get tomorrow. Nice deep pullback into major resistance, two-try failure, again, locking up those buyers, using their stops as fuel to roll lower, and then as we go lower, grabbing that trap, that failure, that pullback combination. Now, guys, real quickly, I know most of you all have taken the free course. You learned all the setups. You know the rules. You know how to. You know when to take them. You know when to skip them. Right? You're trading that stuff on your own account. But if you're here for the first time right now, if you haven't taken the free trading course yet, if you haven't learned these setups and the rules and seen all the examples, you got to grab that free course. If you're one of the people who haven't taken that yet, what are you waiting for? I'll put a little link here for you in the upper right-hand corner. Grab that little pop-up. That will give you the free trading course. You'll learn the entire strategy we use in our trade room. You'll learn all my favorite setups. Most importantly, you'll learn all the rules that we use to qualify the good ones, disqualify the bad ones. If you're sick of missing the best moves each day, or you're taking too many losses, that free trading course is a perfect roadmap to get you back on the right track, so you know exactly what to look for each day. That way, the next time I say deep pullback, 1, 2, try, failure into, what do we always say? First test is the best test. First test off that channel, you'll know exactly what we're talking about there, right? 2, try, failure into that trap, failure, pullback, back down to that low. Now, keep in mind too, this may keep going lower overnight. We may end up grinding down overnight, and we really have the same basic principles here. We're waiting for that pullback. Do we see a modest pullback for a failure? Do we see a really deep pullback for a 2, try, failure? Just keep that in mind. We may keep grinding down overnight. Where does this market really want to go? Look below us, and we have not only a big round number at 4,100, but we have that juicy February's major low. I talked about a weekly chart showing a big reversal pattern. That is the objective on a weekly chart reversal pattern right now. We have a beautiful crown reversal on the S&P weekly and the Nasdaq weekly for that matter. 94.5 is the objective for that crown reversal. We have to think that this is likely going to get there at some point here, maybe this week or next. So we definitely got to know where this market wants to go. Now, I'm going to talk about the range on the Nasdaq. Okay, I'm going to cover the range aspect on the Nasdaq. How do we trade reversal? How would I buy this market? What do you think is the best way to be a buyer on this? Well, first of all, there's really two different ways to be a buyer on this. The first one is like I said earlier, I would love to get this thing to pop up, get those buyers to get trapped and sell back down. Once we get back down to those lows, now it's, what do we always say? Mission accomplished, right? Touchdown, whatever term you want to use, the sellers have now completed their objective. So if we can get this thing to pop up, go back down and retest the low, now this opens the door wide open now for the buyers to grab that double bottom reversal off of that low. Now, this is still a very bear market at this point. This is not a bull market by any means. So we have to, at this point now, well, if we have momentum on our side, we can use momentum. That gives us an edge. If we don't have momentum to give us an edge, what do we need? We need, in this case, the sellers to give us that edge. How do we get that edge to be a buyer here right now? We have to trap in those bears. Let those bears try once. Let them try twice. I like to go out between you, me, and YouTube, draw a trend line off that low. Look for a trap entry off of that low. Bottom line, though, is once we get those bears getting short up top, they're going to take, remember, these are the pros up here, right? These are the smart money, the strong, right? The strong hands. These are the smart money traders selling high. These are inexperienced traders down here selling low. Inexperienced traders have what? Small stops, small accounts. They're not going to let this thing go against them very much. They can't afford to, by definition. This is nothing individual, right? By definition, a small lot trader, a rookie trader, an inexperienced trader, they're not going to have the means to protect themselves. Their stops are right there. And once we get that nice juicy candle, we can now look for that jump right back up. This is what I mean when I say a double bottom reversal on this S&P. We're not trying to pick a bottom by any means. Let those bears sell that pullback and then rope in the weak hands, the dumb money, the inexperienced traders at that low and use those stops as fuel. Now, where do the buyers want to go at this point? The short-term target is back up to retest that high, right? Retest that high. Okay, that's always an easy short-term target. Then from there, we'll see if they can hold a reversal. Now, what would a reversal actually look like? Well, here's a couple to keep in mind. These will also apply to the Nasdaq. Let's say, for example, we get a nice deep pullback here. I'm going right into my area of resistance, and I can't wait to short this thing back into that low. But now the buyers are like, no. Something's changed, right? Some news headline comes out overnight. Who knows what happens? I don't care. We don't care. But what happens is they pull back now. They don't try once, twice, and fail back down again. They hold that pullback, and they jump. And when they jump and run higher, what does that tell us? It tells us basically the sellers are beat. The buyers now have control. Now remember, I'm not going to buy this first pullback. Okay, we're pretty good, but we're not that good, right? This is not a bull market at that point. Remember, if they pull back into this area, we're looking for that pullback to fail and back down, right? Or getting up above this area and fail back down. But if they can pull it back, get up into our sell zone up here, and if the buyers can show up and put their money together where their mouth is and pop this thing running higher, now we have a reversal. Now, I would imagine this reversal is going to target that prior week close like the oil did, and of course, possibly a big run higher. But most important thing though now is how do we trade it? How do we buy it? We mark off that high, we mark off that low, and repeat after me. First test is the best test. This is a very, very important part of it. First test off that new channel, it's a trap, it's a failure, it's a pullback combination. Again, you're going to learn more of that obviously inside that free trading course that I mentioned earlier. Where would our target be on the way higher here? Remember, first leg, third leg are symmetrical. First leg, third leg. So if we go up, we hold that pullback, we blast and go higher here, find that new channel, grab that first test, no matter what entry pattern it is. Again, you'll learn the entry patterns in that free trading course. It's that first leg and that third leg. Don't worry about the middle leg. The middle leg is oftentimes the oddball. It's a little bit bigger, a little bit smaller. Don't worry about that one. Worry about the third leg. That will give you a good objective as we go here. That is what we call a 1, 2, 3 reversal pattern. 1, 2, 3, that jump off that low. I have a couple more reversals I want to talk about. We'll talk more about those here on the Nasdaq. Right now, though, the main thing is wait for that pop up. Wait for that pop. Trap in those buyers. And then look for that return right back down to retest the low. And again, if we keep grinding down, it's really the same thing. If we keep grinding down, what I'll do is I'll start looking for channels like this. Right? If we keep grinding down, I'll draw my channel a little bit differently off of those lows. Wait to get up, right? Get above the moving average. That failure into pullback combo. Or again, if it really pops, 1, 2 failure into that first test channel on the way back down. Again, this will also apply to the Nasdaq as well, right? So if it keeps going lower, we'll keep on finding channels. We'll keep on waiting for that pop. Eventually, we will get that profit-taking rally, and that's where all the pros will be waiting up there to sell into that next bounce here. Okay, let's talk about ranges on the Nasdaq, because obviously we get some more to cover here, and I'm getting a little bit later than I want to be in this video. Over on the Nasdaq, what's the most important factor here on the NQ? Big move lower. Almost an 800-point move today on the Nasdaq. What was it? 782 points on the Nasdaq. I'll tell you, anytime they go above 700 on the Nasdaq, that's a big whale of a move. We already know this. Whenever we have a big move in one direction, we always expect the next day to be somewhat of a range-bound day or a deep pullback. We know we're bearish, so we know we love to get some bears, right? Selling off of levels of resistance up here. We also know, too, that buyers, of course, would love to buy the bounce reversal, that double bottom reversal, or get that 1, 2, 3 reversal. What I just talked about in the S&P is pretty much verbatim what's going to be setting up here on the Nasdaq. The bears want to sell high as we make our way down to a big September 2020 major top at 12,420. That is a juicy target for the sellers as they make their way lower here. Possibly this week, it'd be difficult to put back-to-back days like this together. I know we had one of these last week where with Thursday, Friday, we're both back-to-back big days. It's pretty rare, though, overall, to get 2 days back-to-back to go big moves both days. Is it impossible? Certainly not, but not very probable for tomorrow. We're more likely here to either chop and go sideways or get that nice, juicy pullback for us to sell into those buyer failures. Again, bears want to sell the bounce. Buyers, right? Buyers want to sell the reversal. So we've talked about the pullback, right? We talked about the move up into that level of resistance. Buyers try and failure into pullback combo back to that low. We talked about that two-legged pullback and making sure we use that trend line for the entry going back down. Speaking of trend lines, love this whole area up there. That is where we really hope we get that pullback. Or if it just shoots higher, right, really pops up into it, what do? 1, 2, hit those stops, and as it drops, grab that trap, right? Grab that trap off that high, and if we can, hit that channel. The channel really makes that trade almost bulletproof, right? 2-try failure into that first test is the best test as we go. Okay, we've talked about that stuff already. Let's talk about the range here now. Okay, get rid of this channel. And again, this will also apply to the S&P as well. Ranges. When it comes to a range in a bear market, what you need to remember is that range becomes your magnet. So what I always do is whenever I have a bear market into a trading range, the first thing I do is start looking for levels of resistance above the range, like prior swings, like trend lines coming down. You know what I mean? You want to find some level of resistance above that trading range. Then eventually the sellers are going to run out of bullets. Eventually the bears will run out of ammunition and the price will have no choice but to pull back. Now, I'm not sure why, but when I was a rookie trader, I thought every stall out and bounce meant a reversal. And a lot of traders still make that mistake. Once those buyers come in and try to buy this thing, you've got them right where you want them. The range below you is a magnet. We have all of that bearishness, which you know what I'm going to say. It means the retest of that low is almost a guarantee. And all we got to do now is wait for that pullback. Wait for the pullback. Let those, again, inexperienced traders, usually the ones who are buying this stuff, that's going to give you the fuel you need to sell into those stop losses. Now, that failure pattern, that failure setup off resistance above the range is just kind of the appetizer. Because as we go lower, we now can draw a new channel off that low, a channel off that high, basically a trend line off that low, and then find that channel off the high. And this pullback is another money maker as we go back down. So again, it's a failure pattern right? As buyers get trapped on the wrong side of the moving average with the range below us. We hope we get that tomorrow. And then the add-on to it is that first pullback, that first test. Now, obviously, I'm simplifying this quite a bit right now. A lot of times what this will look like is it'll do this. It'll pull back and run lower. You'll have that little trap set up right there, and you can grab that, right? Grab that trap of a prior swing. You know me, I love traps, and again, you'll learn all about traps and failures and all that stuff inside of that free trading course that I mentioned earlier. Okay, now, where do the sellers want to go for this? This is really important. The bears, their big objective is to go to the other side of that trading range. So that's where you take the majority of your profit off. Then the pendulum swing. The pendulum swing is really, really important. Okay, the amount we go above the range is oftentimes equal to the amount we go below the range. This area, that is the next major support level. So I usually toss a final target down at that pendulum swing. If they break through that pendulum swing, now we have a breakout. Now, we talked about a 1, 2, 3 breakout. Let's talk about some more of that right now, because that is really, really a big potential here as we go. So let's say, for example, this becomes the range here. Okay, there's your trading range. We are bearish into that trading range, right? We want to pop up, find levels of resistance up overhead, right? Find levels of resistance. You get a bunch of them listed there already. We'll find some more tomorrow. Now, this could also apply to that same pullback idea. So, for example, if we go into the first level of resistance overhead, it's a pretty modest pullback. I can go buyers try, take their stops, and I can sell into stops. I can find that new channel, and I can hit that first pullback as we go lower, right? Target the low of the range. Target is, of course, the pendulum swing on the other side. But what if we get a range like this, and what if we get the deep pullback as well, right? What if we really punch back up now? Now it's just that 2 try. It's all it is. It's just you simply apply a little bit differently now. Now the buyers come in once and twice. And why twice? Because, and this may not be the best example of illustration, but if the pullback is really, really strong, we're into resistance, but the stronger that move is, the more likely buyers are going to try to make another run higher. It's just the way momentum works. The stronger the move, the more likely we see another leg in the same direction. That's why you wait for them to try twice. Once they try twice, all their pain is right there. We sell into that pain, and again, we grab that new channel. We find that, right, that hidden channel, and we grab it for a short, back down again. Same idea. Target back to those lows, and then again, big target offs at that point now, back to that pendulum swing. So keep that in mind on the trading range. What is also very, very common is something like this, where we'll have a bear market into a trading range. We get that pop up into resistance. The buyers come in, yada, yada, yada. They come in, they try to buy it, and the market now just simply, right, takes off to the downside. We break through the pendulum swing, and we keep on going, right? We keep on going. We get our failure, our pullback, right, on the way down, but now it breaks through that pendulum swing. We call these slingshot breakouts because they literally kind of slingshot off that high and rotate and spit all the way through the other side of that trading range, okay? This is the next stage of learning the trading range. At this point, do we see, right? Do we see a one, and this is kind of difficult to illustrate here, but at this point, we go up, right? Do we see now a 1, 2, 3 breakout, right? 1, 2, 3 breakout. At this point now, we mark off that low, we mark off that high, we grab that first test. Again, I'm simplifying this. This could be a trap. It could be a failure setup. It could be a pullback setup. We kind of have a good idea of where the market wants to go, right? That big low down there at 420. But we also know, too, that whenever we have a breakout, the breakout leg is the measuring leg. Remember, it's first leg and third leg on a trend. On a range breakout, it's the breakout leg is the measuring leg. That will give you a good idea of where that target is. Okay? Or maybe we see something like this where we go again into a range, we spit up higher, we end up spitting down through, and we grind breakout. one of my favorites. We talked about this last night on the video as well, right? So now, again, we go through the pendulum swing. And again, this is kind of the tail end of this strategy, right? We go through the pendulum swing, and now we're grinding, right? Remember, that grind is a huge giveaway because now you can mark off that low nice and tight, right? Nice and tight. Don't bother with this big one. Don't bother with that big one. I mean, it will be there, but most of the time when it spits and kind of grinds down like this, we saw this today. That's exactly what happened today, right? You grind down, you draw it nice and tight, you find that, right, that hidden channel high, you look left, you find those prior swings, ideally get above that prior swing, grab that trap, get those buyers come in, try to buy it. Once those buyers come in, they get run over with a failure, pullback combo. And again, remember, first leg, which will be this leg right there, right, measuring leg, definitely leave a runner in that situation down to that 420, right, that September 2020 major top. Okay, that is also a really nice breakout on the other side of that range. I have a couple more breakouts. We'll probably save those for the oil, right? Because oil has a great chart as well. So we've covered we've covered the range. Okay, again, be very, very aware of the range tomorrow. And again, this range could be here, it could be here. I have no idea where this range will be, but whenever we get a big move one day, the following day, you've got to be thinking range and relatively, deep pullback, obviously, into some of these areas of resistance. As we go higher again, if the buyers could hold this pullback and jump off that moving average, remember, we do not buy pullbacks in a bear market. It's not the way it works. Not if you want to make money with this stuff. You want to wait for those buyers to try and sell into those pullbacks. But if the buyers can hold this and get that jump going higher, again, this is a bull market now. Mark off that high, find that channel low, first leg, third leg are very symmetrical. We'll see if that happens. Obviously, that will require quite a change in sentiment on this market right now. Is it impossible? No, nothing's impossible. It just doesn't seem very likely right now. We'll see if we get that reversal tomorrow. And if we do, we'll trade the reversal. Like I said, I don't care what we trade. And also, too, remember that bounce reversal, right? Get that move up, the bears come in, they sell off the high, we then take out that low, mission accomplished, 1, 2, failure, where's our target? Yeah, back up to retest the high. 2, try, failure, we're buying into stop losses, and then what do we do back up here? Up here, we look for that breakout. That breakout, do they hold the pullback and go? That becomes a 1, 2, 3 breakout. Find that channel, grab that first pullback. Or do we get a short squeeze? Does it pop and grind? Pop and grind. If it grinds, draw the channel tight, nice and tight. Grab that first trap, grab that first test, right? Same idea. If it bounces and keeps on going, we have a reversal. We know the bears have walked away from this. And that is that could easily happen tomorrow. That'd be a great way to finish up the morning, right? Let those bears make their money selling off the high, grab that 2, try, failure off the double bottom low, and then simply watch and see what happens as we break through that prior high. If it keeps pushing through, pop and grind, grab a channel. 1, 2, 3, grab the channel. Okay? Hopefully by now it's making sense. And if it is, hit that like button for me, right? Give me a hell yeah in the comment section. Always appreciate you guys giving me some feedback on these videos. Because as you can see, I do work pretty hard to make these things the best they can possibly be. Oh boy, back to the oil. Here we go. What's going on the oil? The black gold, the Texas tea, the crude oil futures. What we got going on? So oil's obviously bullish right now, but can the buyers hold this? I don't know. What's the most important part of this? We're definitely bullish, but we are at what I would consider to be some pretty significant resistance here overhead. One of them you can easily see is this measured move. That's a pretty easy one. Okay, that's one level of resistance up overhead. Second thing is, I just talked about this. Whenever we have a range, what's the measured move for a range? Breakout leg, right? Breakout leg is the measuring leg. 1 leg, 2 leg, 3 leg. Make sense? So lots of measured move resistance up overhead. Okay. Also, too, let's just take a trip down memory lane here. Let's go a little bit left here, and let's remember where we are right now. Okay. There's quite a bit of, well, as you can see, big juicy range back at 103. We talked about this last night. We knew this range was there last night. Now, when I look at this range, the first thing I think of is boy, oh boy, notice how they broke down yesterday morning or yesterday evening when most of us were sleeping, right? Most of us were counting sheep, as they say. What do you think happened? I'll bet a lot of traders, by the time they got to their desks on Monday morning, after a springtime weekend, price is way down here. I'll bet a lot of people missed that entire move. And that would make a lot of sense here. Make a lot of sense to why the market pulled back so far. Because again, anytime we see a big move, people don't want to sell down here. They want to sell that low, right? So I have this. When I look at this chart right now, I think, boy, oh boy, this looks a lot like a trading range, a really sharp move that caught a lot of people off guard, and now a pop back up into this area here. In my eyes, this might be one of the biggest turning points on this market we may get in a month. Because if the buyers can hold this, we're going to probably end up rotating back to 105. If that happens, this range, get comfortable most likely. We'll probably end up sticking around this 103 to 102 area for, I would imagine, quite a while. This range is no spring chicken. It's been there for a while, as you can see. But I'll tell you right now, if these buyers, if they can't hold this area, we have this big, big move down. And where do you think the bears want to go? Just guess. They want to go all the way back to 95. And think about the risk reward on that trade. It is fantastic for somebody who is a long-term seller and wants to sell into this. Now, obviously, I'm elaborating on this. I'm painting a story on this. So is there any technical, do we have any technicals that might back this up, Joe, right? That's what you should be saying right now. You should be listening to me talking, going, but wait a second, man. This is a bull market. So why are you so bearish? Well, now let's go into the real meat and potatoes here. This lower high should keep the bulls up tonight. This lower high should be a big red flag here for the buyers, because what this does is this now puts a big roadblock right in my way for me to buy this next pullback. If we pull back to buy the low of this channel right now, does that look like a very good place to buy with that trend line right in the way? Hell no. No. So now when you put this all together, you go, okay, we're at resistance level, right? We're at tons of resistance up here. We have a major range bottom after a slippery move on Sunday evening that probably happened when most of us were sawing logs, as they say, right? And now we have a shallow pullback and what might be a failed retest of that high. This is why I say this could really get good for the bears here. The buyers definitely have potential. Do not get me wrong, but the buyers have to show us some proof here. At this point, I would want to see proof of this big move holding, or I would say the short side with a better side here right now. What do buyers want? Buyers want to see a breakout. They want to see it pull back and keep going. They want to see a breakout going higher here. And if that happens, now we assume we're going to that 105, right? 105.70. 105 is a big round number. This 105.50 area is a really big turning point in the market as well. What do the bears want to do? Oh my goodness, the bears have so many options. This reminds me of last night's video where we have a double top reversal, right? We have a potential crown reversal, trap reversal. We have a pop and grind pullback. We have a 1, 2, 3. I mean, the list goes on. There's no shortage of selling opportunities right now. Obviously, again, this is a bull market. So we can't just say short this thing right now. Remember, we don't just sell resistance levels in a bull market. We know we're at resistance and we are putting together a game plan for it, and we're waiting to see if we can get this thing to trigger us and give us something with an edge to get short on this. So as we go higher, let's talk about this. First of all, how do we buy this market? What do you think? What's the best way to buy this? I would think as we go higher here, I would think a 1, 2, 3 breakout off that trend line would be very likely. Find that new channel, drill down, buy that first pullback, right? We know where the market wants to go. Again, 1, 2, jump. Okay, makes me seem like a fool. Joe has no idea what he's talking about. We're not in the prediction business. I'm just saying right now this is a great spot. If we can get the right setup, has a really lot of potential for that short. But if we can get this thing to go 1, 2, jump, and show me proof that we need here. Show me this is not just the underbelly of that trading range. Get a hold here, right? Prove me wrong. Then absolutely, that first pullback, and again, I say pullback, it could be a trap, it could be a failure, or a pullback combination off of that low. That's an option. I would also imagine too a two-try trap, right? Strong move up. Well, right back here. Strong move up, shallow pullback, higher high in price, traps, baby. That setup right there, right? That setup right there, up here. Strong move up, shallow pullback, higher high in price, traps. Not that trap. Horizontal line. There you go, right? Traps off that low. Again, 105, a good spot for it. Now, is it possible that we might go up, pull back, go, run into this major resistance? We then see the buyers pull it back, double top, and then all of a sudden, it's buyers once, it's buyers twice. Oh, hell yeah. That will be a fantastic trade short. I love that sequence right there. We can make our money going higher, right, with that 1, 2, 3 breakout. Again, 1, 2, 3 breakout, grab that channel, buy that first test. Remember, anytime you see the 1, 2, 3 breakout, that first test of that channel, it's a very reliable setup. But then we retest the high, right? Double top. The buyers get what they want. Buyers, mission accomplished. Then we rope in those bulls. Let the weak hands. Remember, those are not professionals up there. The pros are not buying up there. Those are the weak hands up there buying. Let those weak hands, let the dumb money, right? Let the small money, let them buy right into those highs there. Use those stops as fuel. Sell into those stops. Grab that first test is the best test and dump it back down into that trading range. Okay, that's a great way to look at it here for tomorrow. Or maybe all we get is we get that deeper pullback. We get a trap high, that crown reversal. We talked about this last night on the video. When I'm at a major turning point, like we are right now, but I don't have a double top yet, I can look for 1 try, 2 tries. And again, remember, if we haven't mission accomplished, if we haven't retested that high yet, the buyers are like a dog with a bone. They're going to keep on trying to get that high. Make sense? So that's why you want to look for that trap. That trap, and as I mentioned last night, that lower low can use to find a channel there. That's your crown reversal pattern. And then again, from there, we go out. We watch the market collapse back over. We find our new channel off those lows. We look for that pullback and we grab that first pullback. It is a crown reversal without retesting that high. It's a trap high off a little channel, little hidden channel there. Beautiful short. And then again, grab that short off the first test of that channel as it rolls over as we go. I can be a lot more aggressive on this short if we do pull back and retest that high. Because once they retest that high, mission accomplished. Buyers, right? Buyers make their money. Not my favorite trade right now because that trend line, but it may easily hold. Buyers make their money. The professionals, the people who, right, with the bigger accounts, more knowledge, they buy that deeper pullback. They take their profit at the high. We then see those buyers come in and they try once. Now remember, on this one, we've already retested that high. Right? The dog now has got the bone, right? You know what I mean? The buyers are no longer clawing for that retest of that high. Now I don't need as perfect of an entry short. I can wait for those buyers to try twice. I would love a trap. Don't get me wrong, but it's not necessary. I know where those stops are now. These are the weekend stops. And again, remember, you want to make sure you're getting in here before you get back to that low. That's kind of one of the key components in this, right? We want to sell as high as we can. So we look for that 2-try failure off the high. We then, of course, get that dump. It runs through that low on strength. Bingo. Mark up that low, mark up that high, and short off of that high. Same idea we talked about many times already today on this video. Or do we end up popping up, rolling over, and grinding down? You gotta love the grinds, right? The grinds are great because you can draw that trend line off that low, find that channel, find that, right? Find those prior swings and grab those traps off that high. Or maybe it simply spits and shoots going lower. Pretty obvious at that point now. We now have a 1, 2, 3 reversal. Mark up that low, mark off that high. Anytime we see a strong move in one direction, it's almost a guarantee we see another leg in the same direction. So we find the hidden channel, we drill down, and we find the entry off of that high. Does that make sense, right? So that's how we can sell off this high. Either a double top reversal, a crown reversal, a pop and grind going lower, a 1, 2, 3 breakaway, or 1, 2, 3 reversal like this one, 1, 2, 3 going lower, and dig in and grab that first test off of that low. The other scenario here right now would be if we go sideways up here, right? If we go sideways up here, which in all reality is not, I wouldn't say it's unheard of for tomorrow because you're in a range right now already at 102.50. If we go sideways up here, that will do a very good job at really solidifying the bulls have this. And this is not it's not just one big dramatic breakout pullback like I had mentioned earlier in this section of the video. If we go sideways here into a range, what do you do now? You know this. We find levels of support below the range, right? We wait for that pullback. We trap in those We trap in those bears. At this point, this is not the same situation. That range is the magnet. The range, whenever you have a range, the range is the most important thing in the chart. Let those bears try and get short, buy those stops, and you know this, right? Find that new channel, grab that first test, and up we go into the top of that range. Find that pendulum swing, right? Find that pendulum swing. And then again, do we break through the pendulum swing? If we break through that pendulum swing, it's a slingshot breakout, right? 1, 2, 3 breakout, pop and grind breakout, 2 try breakout, right? We look for those breakout patterns as we go higher. Or do we run into that pendulum swing and then buyers once, buyers twice, back down we go. Why twice? Because we're bullish. And at that point, we're at resistance. We have to trap in those buyers to use their stops as the edge. Because we have the momentum, right? We have momentum on our side over here. We don't have it up here. All right, guys? A little more advanced, I know, but I think you guys can handle it. I think you can handle it. So wrapping together all of the stuff we've talked about tonight, boy, oh boy, I can't wait to see what happens on oil tomorrow. Watch out for that trading range. Again, be aware. We got more space to go here. So watch that 1, 2, 3 breakout. Watch that pop and grind. Watch that 2 try breakout as we go. But we'll see if we get that short. We'll see if we get that reversal off the high here on the black gold, the Texas T. Wrapping things up here for tomorrow. Boy, tomorrow, another big day in our trade room. I hope I'll see you there, trading right along with us. We've now planned our trades tonight. We're going to trade our plan to it tomorrow. If you're looking for a place to learn and trade along, our trade room is the very best place to be every day. If you're tired of missing all the best trades, or you're taking too many losses, making too many mental mistakes, come out and trade it with me tomorrow in the trade room, 8 o'clock Eastern time. We open up every morning bright and early. Oil, gold, S&P, Nasdaq. You're going to love it. We have a great group. You'll love the trade room. I'll put the free course links in the description below the video tonight. I'll put the membership information in the description. And don't forget, you can always call the office if you guys have any questions along the way. I'll be happy to answer questions about anything. Brokers, charts, data, membership options, payment plans, things like that. Again, make sure you subscribe. That way you don't miss tomorrow night's video. And by now, hopefully I've earned a thumbs up on this video tonight. Thank you so much for watching. If you are still watching this late in the video, I commend you for your dedication. You are the person I make these videos for. So thank you so much for sticking around all the way to the end. But let's get out of here. Get some rest. I will see you guys tomorrow morning, 8 o'clock Eastern time. If not, we'll do it again tomorrow night and get ready for Thirsty Thursday. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.